Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of global financial market updates. Now, folks, Friday was quite an eventful day with the impactful updates across markets. Initially, it was the RBI MPC which kept the rates and stance unchanged, but it was the updates on the tax front that seemed to have moved the Indian currency. Interest of the capital gains from the government securities for the FIIs is now exempt from tax. India also had the GDP numbers released at 7.8% for Q4 of FY26 against the expected number of 7.2%. Strong growth against the expectations. On the global front, a strong NFP number had influence across asset classes with USD strengthening, gold weakening, yields rising, and so on. Even on the geopolitical front, we had some sort of escalation over the weekend. So, JK, how are you reading all such updates, and what is your take on the financial markets for the week?
Yeah, good morning, Shikhar. So Friday was a unique day in the sense that it's a massive move in the dollars, and uh, and uniqueness was in the fact that there was every reason to buy the dollar against all currencies, but there was every reason for selling dollar against the INR, and that's something that is not what we have seen for several months now. Now, first on to the rupee, monetary policy obviously was the most looked for event, and headlines were as expected. Rates unchanged and stance unchanged. Uh, the inflation projection was higher and GDP projection was lower, and market took them in the stride. However, what came later was the announcements from RBI regarding measures to enhance capital flows. One was, of course, expanding the freely accessible route for FIIs in the bonds. So all new issuances of a longer tenor, starting with 10-year, have been now included where they can freely invest, and there's no restriction. They also, allowed PSUs to borrow ECBs with the hedging cost fully being subsidized by RBI, and the banks can also raise FCNRB hedges from RBI, being fully discounting the same, in the sense they can swap the FCNR funds, converting it into rupees, and hedge it with no cost. So huge amount of relaxation. Then, of course, the side by side, even as everyone was watching Malhotra ji, we were also getting updates from the government where they removed the taxation on FII interest on the government securities, as well as the profit earned on their investments in government securities. Of course, there was also some relaxation for the NRIs investing in the Indian markets. So these were massive announcements, and potentially a good amount of dollars should flow in. The conservative estimates put it around 40 to 50 billion, but I would think that can be lot more. Why I think a lot more is because a lot of exporters have been on the sideline. They have not been hedging. A lot of corporates have held back their inward flows, and they can come in. And of course, if the rupee stabilizes, the instability of the rupee being one of the causes why FIs have been selling off Indian equities and taking back the dollars, that also can reverse, because then the stability of the rupee can lure the foreign investors into the equity markets. Now we have had the concerns on the AI sector globally. Every other market like Korea, Taiwan, US, Japan, every market was going up. Now there is some concern that that overvaluation is kind of having its impact, and so those monies which are left India and gone to those markets can come back partially at least. And then overall, if you look at the speculator's point of view, NDF market, which generally has a big say in what direction the market takes. They used to be long of dollars all these months, and now if they find that good flows are hitting the market, they could also play from the short side. So there is every reason to think that the rupee has scope to appreciate from these levels with good flows coming in. What can be the limiting factor for this is, of course, the global situation. Like if the war escalates and oil prices go back above 100, and then if we have the bond market turmoil, which we already have signs, and then if the stock market route continues, that's another reason. And of course, there have been a lot of flows back into the US because of the higher yields. And one more important factor is a lot of money is also going to US because of the big IPO issuances by AI companies, the SpaceX, Anthropic, and all that. So those are the limiting factors, but I think eventually those factors can delay the inflows, but eventually the flows will come. And how much the rupee will gain from these is, of course, up for debate. But I would think, in my view, around 93.50 is possible over a medium term. And again, another argument is people say RBI will soak up all the supplies, but having taken these measures to stabilize the rupee and somewhat address the undervaluation of the rupee, I don't think it makes sense to buy the dollars even by RBI at higher levels. They would allow some appreciation, and perhaps at lower levels like 93, they could come back and pick up some of the dollars and replenish their reserves. So it's a good augury for the dollar rather the rupee, and we'll see how things move because, of course, as you also referred to, the GDP number was good, better than initially estimated. Manufacturing was actually showing improvement. And while agriculture was somewhat, subdued, consumption was good. Gross capital information was also good. But on the negative side, the nominal GDP continues to come down. It's at 8.9% for FY26 from 9.7. Nominal GDP is one thing that investors look at because that determines the corporate earnings. Because the higher the pricing power, higher the nominal GDP, and that boosts the earnings by companies. So that's something. But overall, it gives a sense that even though it doesn't cover the Iran war period because it's only up to Q4 ending, that's still March only, one can say that the domestic economy has been resilient. And even if you think that it was a backward-looking data, the recent surveys of PMI on manufacturing and services, as well as the industrial production data for April, all these show that economy is not really slumping, and there is good improvement in these activities. Of course, inflation has been on the rise as well. So overall, there is reason to be optimism, not just on the rupee and also the flows, but also on the economy doing better, but at least for some time. So let's remember that these are in the larger picture, these are only debt. In some form or the other, we are getting debt. Government, RBI get time, breathing time, in which they should probably focus on getting more structural reforms to see that our trade balance is addressed, the extreme deficit that we are facing is addressed, and more sustainable foreign direct investments are also invited. So that is what we look forward to. But in the near term, definitely, rupee has a stronger bias. How far it will go, time will tell. Of course, this pressure will be on the downside gradually, of course. And on the global side, there were, again, as I mentioned, there were several reasons for dollar to strengthen. One, of course, was the geopolitical developments where we had the exchange of clashes, or rather exchange of fire between Israel and Iran. So ceasefire violations being mentioned by Iran and all that. But otherwise, US himself has been intervening, saying that Israel should not continue, and they should be aligned with whatever the ceasefire that is being proposed. But that is one cause why dollar could have slightly strengthened, oil could have gone up. And of course, the non-farm payroll data from US, which came at 172,000, beating all forecasts. And not only that, even the previous month's numbers, 2 months' numbers were raised by 93,000. Unemployment rate held at 4.3%. So this, of course, was one of the big factors that pushed the dollar much away from the narrow range in which it was stuck. 19 and 50, 60, the dollar index level broke very easily, and we are now comfortably trading above 100. This all because of the expectation of rate hike by Fed has strengthened. Not, of course, not in this month's meeting. Now, earlier it was being discounted for December. Now probably it is being brought forward to October. Of course, we will have Kevin Warsh heading the chair from this month onwards. We'll hear his views. He has, of course, some radical thoughts on how the inflation should be viewed and all that. But there is no case to think that Fed will be cutting, and Fed hike is more probable now than a cut. So that's one of the reasons why the dollar strengthened. And finally, another reason is also, while stocks on AI sector remained overvalued, too much money being put in very short period of time. At the same time, we have these large IPOs, trillions of dollars being raised by AI companies like SpaceX and Anthropic. And what market report says is that a lot of people are churning their portfolio by selling the highly valued AI tech stocks and redirecting those monies to acquire stakes, or rather the position in the new companies which are being floated. So I think it's more of a technical as well as some sort of a fundamental news and geopolitical news which is strengthening the dollar. It may be, I don't think it may be a long-lasting rally. However, technicals do indicate that dollar can gain a bit more. Dollar yen has stayed above 160, which is somewhat reassuring for dollar bulls. They may test 162 going forward, and if we break 100.8 or 101 in dollar index, a lot more gain can be seen. But I'm not really very convinced that it will happen. We're still in that broad range between 100.8 and 96. So that range should hold unless we have some another big positive trigger. So all in all, we are in a state where rupee looks stronger. Overall dollar also looks stronger. Thank you.
Okay, JK. And it is indeed quite a unique time with both the expectations of rupee strengthening as well as the dollar stronger based on the updates. And yes, folks, the NFP numbers were some bit surprising, which was beating all the forecasts that we're having. Even the unemployment at 4.3% was interesting to watch how the USD pushed beyond the capped range. And we can also see the probabilities around the rate hike strengthening and even moving ahead in its timeline. So all these things definitely impacted the way dollar strength was being addressed in the financial markets by far. And we've seen even the likes of euro USD moving lower and moving slightly out of the range, although as JK mentioned, we don't really expect any significant break of the range for dollar strength. On the local front, yes, the MPC stance was as expected on the rate front and the stance front, but at the same time, what market did really like or welcome was the updates on the FCNRB front, as well as the update for the banks on the hedging costs being addressed by the RBI, as well as the updates given by the government while this MPC was going on the tax exemption for the FIIs for the government securities. Now, these potential updates are expected to amount for good inflows on the Indian market fronts, probably even amounting more than 40 to $50 billion. And although a lot of market participants are talking about RBI soaking up the flows, but quite possibly it is possible that they would allow for some appreciation of the INR for the timing before they come into the markets and soak things up or lap things up from the flow front. It is time for the government and RBI as well to come up with more such structural reforms to address the trade and the current account deficits. But at least these updates definitely provide some sort of a breather or time for them to work around these structural updates for the timing. So yes, folks, this is about it for today, and we shall come back again tomorrow with another round of updates. Thank you so much for joining in.